learned from the lesson. Live in the hills, but I still get a spread. Started with a little, but I still reinvest it. Fear how I feel, then you feel like a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down.
All right, ladies and gentlemen, I hope you had a wonderful day. I got another watch list for you, and even though the market didn't move big, today was absolutely insane, and we have to worry about China now. So listen, I know the title is a little bit dramatic, but what I'm trying to say here, and depending how things play out in the next couple of days, we may very well overlook one part of it, but all I am saying is that you potentially might see global tensions start to impact the market again. We saw it a little bit this morning, and if you don't know what I'm talking about Miss Yancey, the best trader in the world. She is visiting Taiwan, and it is creating a lot of different things. So like I said, I got a cool visual. You'll be able to understand it. We're going to talk about it. We're even going to talk about the plays and the impact. But now, since this week was really going to be earnings and a little bit of data and watching out for the Fed, what I'm trying to tell you is pay attention to the China stocks. Now, there was a bunch of other stuff. So even to give you the breakdown before the keys, it's like you have to worry about the China-Taiwan stuff. Then there was bad PMI data or ISM data out of China, and that was really bad. It even had an impact on oil. So it's one part China and Nancy Pelosi, but then it's another part literally bad, really bad economic data that came out. So there was that. You got the Fed speakers today, Kashkari and Bill Dudley, the head of the New York Fed. They both came out and they were really trying to talk down this idea of the Fed pivot. They were pretty hawkish, more or less. So there was that. Then you got the first wheat ships finally moved the port today. Again, if you've been following, this has been a big deal, but in the process, it was like separate but related. One of the like biggest wheat distributors in Ukraine died because of a bomb. It was actually pretty crazy, but there was that. ISM data was kind of mixed across the board, didn't get better, but prices paid in the US dropped dramatically, so that was kind of bullish. And then you had a big Apple bond auction, which did actually affect the yield curve because Apple offering long-term bonds and the yield is relevant or related to the treasuries. It gets crazy, but point is, there was a lot today. The market didn't really reflect it. We only moved a quarter of a point, but now we are going to have an exciting week, and we definitely have a lot to talk about. So drop your thumbs up on the video. Make sure to subscribe. YouTube.com/the stock market. We'll see you there in the morning, baby. It's free 99. I'm sorry. I don't know. I just so much to explain, and I have to wear the same shirt. I wore this a couple days ago, but I just did the laundry, and it was fresh, bro. Like, what do you want me to do? Okay, here's your infograph now to understand China. All right, here is your interactive infograph. What we have here, brought to you by Push-Ups and Resistance Bands, is your red line, okay? And on the other side of the red line, we are going to use the scary, angry shark to describe China. And the only reason why we are using this as a visual, because China said, we ready for war. If you cross the red line, we gonna attack you. Like, they ain't playing around. The dude on Twitter is going crazy. Like, I'm telling, it's wild, but the red line here is pretty much Nancy Pelosi crossing the red line, aka visiting Taiwan. And if she does that, they said that is going to cause a lot of problems. If you don't know why, well, here's Nancy. Nancy, come on, please. Come on. No, hands down. Come on. You ain't trading. I don't know. Listen, but if you ask Nancy or why this is a big deal because of this lady, is because this would be the highest ranking official to go to Taiwan across the red line since 1997. It has a lot of implications. We said this today. Obviously, there's a lot of big differences and there's a lot of things going on right now, but essentially, Taiwan, the other side of this line, is like the Chinese version of Ukraine, more or less. Again, a lot more history behind it. Now, that's the quick rundown, but what happened today, everybody was debating what Nancy's doing. Again, I put Nancy in a Porsche, a Lego Porsche, because I don't have a jet. But essentially, she's on her way, and they're like, yo, she's about to go tomorrow. She's not, you know, she crossed the red line. Oh, you had Kamala hiding in the background. I don't know what she does. She's just there. But pretty much, if Nancy goes across in the next few days, we are going to have a very, very big problem, okay? So hopefully you got that. But if you don't understand it, everything going on today. Everybody's going back and forth on whether Nancy is going to go or not. And China's been ramping up the tensions. Kirby came on. They said, nah, we don't think Taiwan is independent, but they said it's not really that big of a deal. We are allowed to go there if we wanted to. They said China is making a big deal of nothing. And then pretty much China's trying to say, no, we have a red line if you cross it. But pretty much in the next day or so, as everybody debates what Nancy's going to do or where she's going to go, depending on if she crosses that line, it is going to pretty much create a lot of China tensions. And where we go from there, the consequences, who knows, it might lead to a lot of other things. So that's the first thing. And like we said, the China data in the morning was bad, but now coming into the keys and understanding what else happened today, I got to start with the Fed because this was actually huge. And this is what you got to watch for the rest of the week. But like I said, Fed Dudley and Fed Kashkari this morning, they both were trying to talk down the rally. They both were saying 2.5%, 2% is not neutral. Fed has a long way to go. If they don't control inflation, it will be one of the biggest mistakes ever. Even Bill Dudley, he even said that this is a self-defeating rally because as the market's getting excited off of this, the fact that the markets are going up so rapidly, it is actually loosening the financial conditions when they want tighter financial conditions. So it's very, very interesting. But like I'm saying, we have a lot more Fed speak. And last time when it was Bullard and Bostic, they really drove it home to move the Fed futures. But just keep your eyes out for this because if we see any bigger Fed names echo this sentiment or we see a chorus of all of them saying, no, the Powell's not pivoting, we don't want to see financial conditions loosen, then that will pretty much dictate this rally and where things are at. Or you've seen it in the past, the market can adjust quickly, bonds and Fed futures might start going crazy, and then we got to deal with something else. So that's the first major key. Again, there's a lot, and I would be watching out for China, but this is definitely with everything we're expecting this week. Those Fed speakers, just keep your eye out for that. That was big, but that's the first key. Second key, again, this is the broader thing we're talking about, whether or not China does something, but the point is there is a red line being set. We'll find out what happens, but it can increase global tensions, and you're seeing kind of what you saw earlier in the year with the Russia stuff as it developed. The thing that's different about this is that we're actually seeing a pretty quick impact on the stock market, relatively speaking. So that's what you got to watch out for. But this is now a new factor on this week. Besides this, we were just looking at earnings and then the non-farms and then the Fed. But now this one, it does give us a little uncertainty now moving into a little bit of the later stages of this rally. But watch out for that. That's the second key with global tensions. And then finally, like we've been saying, there's a massive amount of companies still that are going to be reporting. That is going to be the bigger tensions. But now just watch out for the Fed or global tensions to derail some of what we've seen over the last couple of weeks. So I hope you're ready. But I was actually supposed to say that at the end, but let us get into the plays. So right off the bat, I made a couple of different plays. We did a debit spread. We're going to go over it. I do have a play related to global tensions and everything going on, but now I also got some random earnings plays. One of them I really like, and then I made some other plays that aren't on this top 3 list. So we'll go over all that, but as far as number 1, LMT, Lockheed Martin, if we get global tensions, literally a literal defense stock, not a defensive name like consumer staples. I'm talking like defensive stocks, NOC, LMT, RTX, all of those. We saw them move at the beginning of the year. So that's what I'm saying. If somehow this turns into real global tensions, again, the odds of it now are kind of like 50-50, I would say. That's why it's so interesting. But if it does lead to more tensions, even if it's minor, again, global tensions won't be good. I think LMT will get affected. But like I said earlier, this also could die down pretty quickly. I would not be surprised if that happened. But I did decide to go with a play, and I went with LMT. I think it could do good. And this is why I went with the debit spread, because pretty much it does not move good unless there's a big pop. It's very hard to make money on this chain. We've played it a couple times. We even hit a couple of 1,000%ers on it this year already. So that's the good part. But what I'm saying with LMT, the fact that we know the tensions are kind of right around the corner and we're seeing effect, it can make it so we don't have to go too longer dated and save money. So I thought I'd go with a little bit more of a riskier gamble on the short term. So like I'm saying, I do like this idea. I like the China stuff, but there is a higher element of risk going for a 2-week play on this, and it's really not necessarily guaranteed. There is still a lot of unknowns. So as far as the play, I grabbed the August 19th. Again, not much time. I grabbed the 460 calls. They were a little bit there near the peak on on the year, so it's possible. And then I bought 10 of those and I shorted the 480, so that leaves a $20 difference per share that we could profit off of. But by buying the 460s and selling the 480, it came out to a net total of 40 cents a contract. So I spent $400 for 400 of them, and the max gain on 10 contracts at $20 is $20,000. So if LMT goes to 480 by August 19th, a major pop, we'll make $20,000 off 400. But even if it gets a little bit in the money, we could still make some profits or even sell out on the way up. But if none of this goes away or this turns around, we're going to lose $400. So that's the first play. That's a debit spread. Again, don't trade them if you don't know what you're doing. None of this is a recommendation. But now to the second play, Ford, baby. We already have our plays. We got this last week or 2 weeks ago from earnings. Only spent like $5 on them. They're up around like 400 or 500% right now. Killer play. But why I'm putting it up here, I'm already in the play. But now I'm thinking if the rally continues, we talked about it yesterday. Tesla did good. If the market stays optimistic, global tensions don't derail anything, the Fed don't get in the way, earnings are even good in the morning. Again, you have a lot in the morning. I'm thinking a lot of people might flock to this because this was one of those cheaper names, EV, a little bit more history, and it has a dividend. So I'm thinking it just could go crazy. And even then, we brought this up on stream pretty much. S&P is right back at February levels, but Ford, they got like $1 or $2 of gap that they might be able to fill, or at least getting back to where they were at February, like the market. So I like them holding those plays. That's number 2. And then number 3, baby. This is my favorite one. I really like it. It's a weird one, but Unity, ticker symbol U, and the play that I got, let me give you the specific one. I did not spend really that much money at all. I grabbed the September $60 call, so still about like 50%, 100% out the money, but I grabbed that for 45 cents or 47 cents, but like I'm saying, it has till September. It covers earnings. They report next week. They're a gaming play. I mean, if you've seen Roblox, they've been outperforming. Unity and Roblox kind of moved hand in hand, but Unity is just like pinned down right there. So I don't have any expectations. It kind of reminds me of my old Affirm play. We did that one last year for a couple 1,000%, but it just kind of reminds me in the sense where I'm saying, hey, I like that it's pinned. I like that it has earnings, and I could get one contract for less than $50 with over a month of time. I'm really, really liking that. So Unity, earnings, gamble. Again, I wouldn't go more than $50. I didn't, but I think this one could be a nice one if we get a surprise on the upside for earnings. And like I'm saying, you got cheap, you got time, and it's a big mover that we've seen move in the past. So that is the third play. But as far as everything else, like I said, we made a couple of other plays. I grabbed 200 shares of Chimrex, CMRX. It's a monkeypox play. I grabbed 200 shares at 2:30 in the morning. Why I bought it, there was just so many monkeypox headlines, emergency designation. I was like, all right, maybe it's time. I didn't go with SIGA. I went with this one. It was brought up in a Bloomberg article. Pretty much the best monkeypox plays are all in Europe right now, so you can't really play them. So I said, let me go for the one with not so much premium, kept it small. I mean, 300 shares at $2, spent about like $600-700. So willing to take that risk on equity, but made that play, made the LMT, and then I also grabbed the ATSG September $40 call for 28 cents. I grabbed one of them. They went up a pretty decent amount, and the reason, I think they're even up over 100% right now, but it was like AVWW, a very similar company, aerospace supplies. They got a buyout offer from a private equity firm. They went up as sympathy, so we got in pretty early. I thought the price was cheap. Again, with time, $20. Thought I'd go with it, reacting to the news, and then I did grab an Airbnb put. I know I usually don't do this, but I grabbed an August 19th $90 put where they were at. I spent $110, but I have so much to the upside. All the stock did was run down, so if we do get the reverse and kind of have one of the sell-offs leading into earnings, I'm hoping I could bank off the premium and maybe get the window to buy calls, but I said I'll get with the puts. They're cheap for now. We'll see how things play out, but primarily I want to see Expedia and Booking. I think we might get better plays as Airbnb will kind of lead the pack, but that was pretty much it. As far as everything else, I will keep a close eye on energy. Again, all of the data and earnings and stuff we're getting with China in here, it is having an impact on the commodities. We're seeing a lot, but they've kind of been cool. But as we get more further here into August, I mean, I'm kind of waiting for them to pop off or kind of set up a leg, but still holding some of those other plays, still in the Europe plays as well too. They also had bad data, but really this week, watch the earnings, but I think the global tensions, I really want to see if they're going to creep up. But if they fade away, go back to the original game plan and watch the Fed, watch the earnings, and then we'll see where the commodities work themselves up into this, especially as we get to the end of earnings season. It might get a little crazy, so I hope you're ready. But that is your watch list, ladies and gentlemen. Make sure hydrate healthy, ready to go. Make sure post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. I need you to remember, yeah, he's smiling up there. You may not even realize it. Again, recognize their impact, and if you need a reminder, the story's not over yet. Some of y'all, this has just been your 1, 2, 3 years of training, and now you're getting ready for the big one. So finish strong. Let's make it to the end. Earnings season, end of the year, all of it, and protect yourself. Watch out. You might get drafted. I don't know. Never mind. Nancy, save me. But I love you. Drink that water. Stay healthy. Pray for me. I'm praying for you, Chad. And I'll see you in the morning. Goodbye. Peace out. I love you. I'll chill, bro. I'll chill. You want? Hey, man. Hey, man. Look at that. Okay, I don't know what I'm doing. I feel like I missed the awkward endings, you know? We could talk about it if you want. I'm down to talk, you know, I'm chill. It's okay, you don't want to talk about it? I can talk about it. Is it weird now? You're making it weird. If you make it weird, it's not that weird. That's how a lot of things in life are. It's not that weird, but if you make it weird, you know, that's why if you judge people a lot, you're going to think people judging you. It gets a weird, you know, but if it's awkward, I'm chill. I could do this for a while. It's up to you. I mean, you do good. You got the long term still. We had a lot of good rants on that today. All right, I'm going to let you go because you need to rest, okay, and stay hydrated. Okay, I love you. I love you too. Good night. Okay, goodbye. Peace.